Otrati would like to acknowledge the land we're all on, wherever we may be. Otrati conducts business throughout Portland and beyond, and is making an effort to acknowledge the history of the area and work toward the colonization of the bioscience industry. Portland rests on traditional village sites of the Multnomah, Clackamas, Clackamas, Chinook, Tualatin,
Oh, I'm sorry.
Kalapuya, Malala, and many other tribes who've made their homes along the Columbia River. So please join in acknowledging the land we're all on throughout Portland and beyond. To learn more about Portland's native, diverse, and vibrant community, please read Leading with Tradition, a document created by the Portland Indian Leaders Roundtable. And Sarah will put a link to that in the chat. So without further ado, let's get started with our presenters today. We have from Forward Slash, which is the branded division of Geffen Measure, we have Beth Nguyen and Veronica Miller, and they're sponsoring this event today, which we surely appreciate. And they're providing a really great lesson for us on accounting best practices. And it looks like there's a link to their contact information in the chat as well. So I'm just going to give a brief introduction. One of Forward Slash's founding advisors, Beth, is serious about improving the lives of entrepreneurs everywhere. Having helped numerous businesses go through successful exits as a leader on Geffen Measure's transaction advisory team, she brings to Forward Slash expertise on implementing processes proactively to pave the way for success. And she's never stingy with advice from an investor or buyer's perspective. Beth works with emerging growth companies on a variety of industries, including software as a service, consumer products, manufacturing, real estate, and construction, and has an aptitude for scaling ideas up and down to serve the unique needs of every client. And Veronica, having helped companies across various industries navigate financial statement audits, Veronica understands the method of communication and processes that lead to continued success for her clients. Veronica leverages her diverse background in accounting to serve Forward Slash clients, including expertise in internal controls and navigating complex transactions. Veronica is a leader in the firm's Diversity, Equity, and Inclusion Committee and brings care and empathy to all her interactions with clients. She serves clients in a variety of industries, including software as a service and professional services. Veronica's focus is on emerging growth companies. Forward. There we go. So welcome to the podium. Take it away. Thank you. Thank you so much.
Hi, everyone. How are we all doing? Fabulous. Good. I am glad to be doing this in person. I was just telling Renee, I'm really glad I didn't have to do any Zoom presenter meetings because you just could not get a feel for the audience. And I know there's some of you on Zoom as well. Glad you're here also, but I can't see you. So, excellent introduction, Renee. My name's Beth. My background is in the audit practice at Geffen Measure. If anyone is not familiar with Geffen Measure, we're a full service accounting firm in Portland. Our office is right downtown. Serve mostly clients in the Pacific Northwest, really wide range of industries. We actually work with OBI in our audit practice. Louder. We've worked with OBI in our audit practice, and a few years ago we started Forward Slash, which is a branded division of our firm, not separate ownership or entity or anything like that. But the purpose of it is to serve clients with outsourced accounting, controller, CFO type services. So we've been doing that for 2.5 years. And Veronica joined us about a year ago. So
I started my career the first 6 years in the audit department, and I transitioned to work with Beth a little over a year ago.
So we want this to be interactive. If you have questions as we're talking, please bring them up. We tried to survey you all and ask your questions ahead of time to try to inform this, but I know we're all busy, so please interrupt us if you have questions. We wanted this to focus on why accounting is a strategic investment in your company, kind of when to make that investment and what that looks like, and some best practices in accounting. If we get time, we'll go through some common complex accounting issues. The point of going over those is not to get into the weeds or make you experts on any of these topics. They're just things that, from our experience, business owners should be aware of, so that they know when to ask for help, and when can be aware when things like that come up and everything. So yeah, like I said, and in the chat, I think we have someone monitoring the chat if you have questions as we go. Volume okay now? Okay, cool. Oops. So there's a few reasons we see accounting as an investment in your company. I know it's boring. It's not why you got into the business that you're in most of the time, unless you're us. But there's a few kind of key points we want to hit on to explain why it is an investment and why you will save yourself time and money on the back end by investing in it on the front end. This is kind of obvious, but accurate historical data. I'm sure you all have some relationship with data. Accounting is the same thing. It's there to inform you about your business, the health of your business, help you make decisions. And you really can't do effective forecasting and tracking against that forecast. That's the second piece of forecasting. A forecast is nothing without something to measure it against, and you need that good historical data to be able to forecast accurately, help you make decisions about where you're going to invest your resources and how you're going to spend and everything like that. The second piece is a little bit more external. Your solid accounting finance practices can help you attract and retain investments. So if any of you have started to go through financial diligence, or even just have friends and family who are interested in investing, they might be asking for your financials. You want to hand that over with confidence. You want to know how to answer questions as they come up, and having an intimate relationship with your financials and potentially whoever is helping you with your financials makes that process a lot easier. Let alone, as you grow and potentially take on outside investment or need a loan or something like that, your financials seem to be in good condition. And we see time and time again, companies get to that point, and then they have a lot of back work to do to clean up and be prepared for investment or an audit or anything like that. So which brings me to the audit point. Easy to get through an audit if your financials are in a solid position. And I don't mean that just in the financial health of your company, but also the technical piece of accounting for everything properly and having documentation and processes in place. So Veronica will talk a little bit about grant management and reporting, since that applies to some companies as well.
So many startups in the biotech space are partially or fully funded by grants, which some of you may be aware. If your organization is funded by grants, you're likely aware of how tedious the reporting process tends to be. Stay in compliance with those. Grants and grant compliance can be structured in many different ways. Some grants provide a ton of flexibility with room for creativity to spend awarded funds, while others are much more restrictive. This can impact your financial reporting through being able to show that you're complying with certain allowable expenses, paying for certain types of employee positions, or showing revenue growth in certain segments. So taking the time to thoughtfully implement your grant reporting requirements, or implement financial and time tracking processes and procedures that will inform your grant reporting requirements, can help ensure that you're receiving the money that you're asking for reimbursement for. Can also help ensure that if your grantor decides to do an audit at some point in the future, which I think most contracts are written where they can do that at any point, you're going to be able to keep the awards that you've been given. So We are going to move into best practices. We've touched on this already, but one of the things that we talked about is investing early. We're going to discuss more about how investing resources to implement solid accounting procedures and systems early will provide you a foundation to keep things tight, and it can also just help guide you from the start. We will discuss implementing systems to streamline your processes and gain efficiencies. We will discuss the benefits of closing monthly and what specific tasks are involved in a monthly close. We also wanted to mention that it's easy to put on the back burner documentation for kind of out of the ordinary or complex accounting entries that you may be making at the beginning or at any time in your organization's existence. It's really important to maintain that documentation. It'll help you and your advisors have that for the purpose of discussing financials or during your taxes or during like tax filing season or during audits. Lastly, we will discuss cash versus accrual accounting and the importance of each. So we want to set ourselves up by creating a solid foundation. We recommend not doing it yourself unless you have experience and expertise in this area already, but to seek guidance from somebody who does if you don't have that expertise. You want to think through sustainable and scalable processes and procedures. Certain processes and procedures in your accounting cycle may seem like overkill today when you're a small company, but it'll really help you scale quickly and make sure that you're not sacrificing the quality of your financial reporting, and also can just help ensure that errors are caught early and timely, and you're not all of a sudden 6 months down the road, something happened and you're looking back on it and you have no idea what that was. One item that often gets overlooked when we're going through this process is implementing and thinking through a thoughtful chart of accounts. Putting together a thoughtful chart of accounts from the start can help guide hygienic accounting practices as your organization learns and grows. You'll want to build this based on information that you hope to glean from your financials, as well as by thinking about how information syncs with your accounting solution. We'll talk a little bit more about some of those third-party solutions that we use to sync to our accounting systems later. We also recommend, when applicable, utilizing classifications. Most accounting solutions have these built into their software. These classifications can be different departments within your company. They can be different funding verticals if you're receiving grants. Using these can not only help inform your financial reporting in a very specific way, very precise, but it can also help you track your grant spend, for example, and your progress towards certain goals.
Any questions about chart of accounts? Is a little bit of a technical term if you don't have an accounting background. Account classifications, we're getting into, yeah, go for it.
Yeah, Veronica, what do you mean by processes and what's a scalable process?
So processes are, for example, your expense process. So you start out with your invoice that you receive from your vendor. It gets turned into a payable on your financials. It gets turned into an expense at the same time. It's just kind of the process with how, who's receiving that invoice, when they're implementing it, how we're determining how it's going to get expensed, and during which period it's going to get expensed.
And approval, setting up an approval process. Even if there's only 2 people in your company, like somebody should be reviewing the bills before you're paying them, that kind of thing. So we'll talk a little bit about technology that we use, best practices to help that along. Accounting has evolved a lot from a technological perspective, and there's a lot of reasonably cost solutions to help a company implement the processes without a whole lot of effort. Yeah.
I have a question, but I don't know whether to address it here now or later. We have a couple of pieces of equipment, and this is for our service, and when we price to the customer, because our customers, let's say we have 10 customers, they all use this equipment. How do I price? How do I allocate the time that they use on the equipment for the customers?
Can you
follow my
repeat?
question?
So let me see if I understand it correctly. Your customers are using equipment that you own?
Yeah.
Or So you're kind of like leasing it out to them.
No, they just use the time, and when we build them, because. Let me try to explain it. Let's say I have 10 customers.
Yeah.
I have 3 pieces of equipment. They all use this equipment. When I price a project to the customers, how do I price it?
There's a
Should I
few,
consider this equipment as overhead?
I
Because not every customer uses the same amount of the equipment. Like a customer one use only 2 hours, the other one use 30 minutes. So how do I?
yeah,
Kind
so the question is about, essentially resource allocation of equipment.
Yeah.
That is utilized by the customers, and the amount of time or time that they use the equipment could vary. Did you have an additional thought?
Yeah, I think it's similar to what Beth is saying. It sounds like resource allocation. I think you mentioned overhead. A lot of times we would consider
Yeah,
that.
today you just consider this overhead.
Right.
Okay. For for each of customer, when we price the project is okay, represent, for example, overhead, and those overhead include.
So usually, what you might call depreciation of an asset, so $100,000 expense, $10,000 a year for 10 years, whatever. If it's directly going towards the things that you're selling to your customers, which it sounds like it is, you would consider it more a cost of sales as opposed to overhead. How you allocate it in your internal reporting to determine the profitability for each customer is kind of up to you. I think if you have that information of you know how much each customer uses, if you had in your financials already that cost expended over time in your cost of sales, you could take that, divide it by the total number of hours in use and allocate that to each customer. That would be totally outside of accounting, but that's a great example of how having that in your financial reporting readily available can make that calculation and analysis a lot more easy.
Can I ask a follow-up question to that? So assuming you charge your customers an hourly fee for the time they're using the machine. I don't know, $200 an hour
Yeah.
for the use, plus maybe a fixed setup fee. So is your question then regarding how that is basically characterizing your accounting as like either a fee service for fee for service or material or, I mean, because I assume you also have personal costs because one of your employees has to run the machine, has to monitor it and stuff like that.
This is just the computing time. You have all the costs,
Okay,
right? This is just the computing time. So today, what we're doing is, we just, we can track how much time they use with the machine, right? And we say, okay, and we just, let's say the machine costs us about $30,000 a piece. We say, okay, for 10 customers, we just divide by 10.
Actually, I think a better way to do it is establish what the hourly
Oh, yeah.
fee is for using the instrument and just do that. Then you don't have to worry about depreciation or anything because the use of that is going to be the same irrespective of when you do it. So this is like it's like using instrument central services at the university. You get charged per hour, and it's the same hourly fee, irrespective of when you're doing it. It's going to be $50 an hour or whatever. So you put that as part of the bill is saying that you also will get charged specific time on certain instruments, and then it'll be based on then you don't have to come up with some arbitrary division of how many clients you have. It's going to be the same fee for any client.
On the revenue side, for sure, but knowing that cost per client could help you come up with whatever that rate needs to be for that to be.
Yeah. Then we try to figure out the cost margin for each of the project. That's right. Okay.
And that's kind of what we're talking about, going back to what processes and procedures are, is thinking through all of these things. How recognizing the revenue and expense related to it impacts your financials. And also, it's just useful to be able to do that thought process early on so that the way that you're recognizing that cost and revenue is going to be consistent over time. So you're able to like analyze trends and pick up information from that.
Thanks for the questions. So on the screen here, we've got a number of systems that all have some relation to the accounting process. We use all of these. They are definitely considered best in class for their purpose. There are other industry specific solutions out there that may make sense for a business. This is kind of more universal. Some of them I would say this works no matter what kind of business you have. Some of them I would say you might grow out of this at some point, for example. So we kind of broke them up into financial reporting, accounts payable and bill pay, equity management, and then expense management. So starting with financial reporting, I'm sure we're all familiar with QuickBooks Online. It's what most businesses use when they first start out. We exclusively work with QuickBooks Online as opposed to desktop. That's because it's cloud-based, and so it has a lot of integrations with other software. QuickBooks Desktop has a little bit of that, but it's not going to be real time. It's usually a little bit more manual of a process. So we use QuickBooks Online. You will talk to people, I'm sure, who say QuickBooks Online is terrible and you should use desktop. We disagree. We've made it work for every one of our clients, and its main benefit is that integration feature. So
I think also something to keep in mind too is they've been saying for years that they're going to stop supporting desktop. So at some point, if you choose to have desktop at the beginning, that support might go away at some point in the future. We don't know when, but
Sage Intacct is what I would consider your next level after QuickBooks Online. It is the only accounting software that is backed or approved by the AICPA, which is our standards, our accounting association. So it's been vetted in terms of being a best-in-class solution, both for the user and for compliance purposes. We don't currently provide it as an option, but we're looking at it, and I do have one client who's transitioning onto it. So that'll be kind of our first experience in the weeds with it, but multiple other firms recommend it as well. And that's really like a full ERP accounting solution. What's great about it is that it has different modules, so you can add on to your subscription if you have inventory and need that module, or you have complex revenue recognition issues, add on that module. Or if you don't, kind of pay for the bare bones. So it's also cloud-based. It also has a lot of integrations, really large marketplace, which is where all those kind of partners live. It is more expensive. It's not worth doing until you're at the size where you need that
functionality.
but yeah. Quick contrast on what was that? Sage Intacct versus NetSuite.
Sage versus and
I will say I don't personally have experience with NetSuite. I just went through this with a client evaluating both, and they did decide Sage Intacct. They're very similar. I don't think you could go wrong with NetSuite. But I don't know totally enough about it to compare and contrast to the details. I could look into that though and follow up with that individual. Maybe this person has some insight too. And then QVinci is one of those QuickBooks partners. It plugs into QuickBooks. If you have multiple entities that you need to consolidate and report into one, QVinci is a great solution for that. It connects to multiple QuickBooks Online accounts, and then I won't get into the details, but you can get by entity kind of column reporting, or you can get totally consolidated. That is kind of one of the biggest downsides to QuickBooks Online is the lack of multi-entity reporting. So that's a great solution. If you want to stay in QuickBooks, you're not quite ready for a Sage Intacct, but you have multiple entities. It also is just a lot more robust reporting. So it'll do more trend analysis and give you key performance indicators more automatically than the QuickBooks reporting does. So it can even be good for a single entity. Yeah.
So are any of those easier to transition to when you go into SEC type reporting, when you're gonna go public?
If you're gonna go public, I think it's time for Sage Intact. Sage Intact can handle a public company, can handle audits. Warby Parker, for example, uses Sage Intact. Like there's some really big companies out there that use it. It's so widely used because it's super scalable. So that's one of the reasons we're implementing it with one of our clients right now, because they're scaling pretty quickly and they've needed something that would go with them. So
The follow-up question, so you can import the data from QuickBooks to Sage. Today we use QuickBooks online. They say that later on we want to move to Sage. Let's say go public or whatever, you can import all the data. Or you can start
you
with-
can, yes. There's Sage is a big enough product that you would work with a company to help with the implementation, and they'll give you some options on how you import your historical data, whether that's like a summary level or kind of more detailed. But yes, you can import. Sage is great for importing. I will say that's another downside of QuickBooks when you start needing to import a lot of things. And before you import, always check if there's an integration with whatever, say you're working with Stripe to process credit card transactions. Stripe has a connection to QuickBooks. Like you don't need to do the import, it'll do it for you. But if you actually have a system that you're using that you need to export something and import an Excel file, QuickBooks is not great for that. Sage Intact is awesome for that. Any other questions on the financial reporting tools? Yeah, that type of things. I will mention too, QuickBooks Online is made for the amateur user. That can be both a good and a bad thing. Like the user interface is going to be a lot more natural to your average, and when I say average, there's non-accountant person. Obviously you're all very smart in the other things that you do. But because of that, it's really easy to think you're doing everything right and not actually be doing things right. And then you realize it on the back end and there's a fair amount of cleanup. So that's one of the reasons we recommend working with, as soon as you can, a trained accountant, CPA, even if it's just oversight over what you're doing. So you don't know what you don't know. Bill.com is an accounts payable automation solution. You essentially like upload or even get your vendors to send you electronic versions of your bills. It goes into an inbox, an email inbox essentially. And then Bill.com will OCR read the bill and pick up as much information as it can. It's always going to need some manual checking of that. It won't always pick up the right number, for example. And then it's also a huge network of companies that are on Bill.com. So you can pay your vendors electronically through Bill.com. You can also get paid electronically through Bill.com. And it syncs, has an integration both with QuickBooks Online and Sage Intact. I'm pretty sure it does with NetSuite as well, and pretty much any other large solution out there. We use that for all of our accounts payable processes with our clients and have helped companies implement it. It's pretty slick once you get it set up. There can be some things to work through occasionally with syncing errors and stuff, but overall it's a pretty good solution.
Regarding like approvals and stuff for expenses, Bill.com is great for that too. So I know historically a lot of companies would maybe require like 2 signers on a check for a large expense over a certain threshold. You can do that all electronically through Bill.com. You can set up rules where a bill cannot be paid until it has certain approvers. You can set up rules to where a bill cannot be initiated for payment, and if it's over, say, $10,000, unless a certain specific person has approved that bill. So you can set up all of those controls within bill.com. So the IT physically will not let you pay it without it, which is nice.
So is Janet invoice for you also? Invoice?
Invoicing customers.
Yeah.
Yes, there is an AR function. It also syncs with QuickBooks. I personally don't have a ton of experience with it, but especially if your customers are on bill.com already, it does make it easier for them to pay you. Bill.com is like, depending on how many users you have, I think it starts at like $60 a month and then $1 per bill. So it will it will cut a physical check if your customer, your vendor doesn't want to get paid electronically and mail it on your behalf. And then it's like 60 cents per ACH. I'll touch on equity management last. Expense management is, many of you have probably heard of Expensify. We've used both Expensify and Tally, which used to be Inverse. These are solutions to help manage credit card expenses and employee expense reimbursements. So expense reimbursements, you might not have until later down the road, you know, when you have a lot of employees, but we see most companies have credit cards these days. Super convenient. We all love a good credit card, but on the accounting side, it can get difficult to keep track of receipts, maintain accountability for your credit card users. Both of these solutions essentially connect directly to the bank feed credit card. Sue has a credit card and can log into Tally or Expensify, see all the charges on her card and attach receipts to those, and then it will go through an approval process, similar to bill.com, however you need to set it up. And you can set up policies where, you know, if you're spending less than $50, you don't have to submit a receipt, or you're spending money on meals and entertainment, you have to tell us who is there. Definitely helpful for both IRS compliance and audit compliance, and just general oversight over credit cards, which we do consider to be like a higher risk area for companies for fraud. The last thing I'll mention is equity management. If you start granting stock options or have convertible notes and, you know, multiple levels, multiple classes of equity that you need to manage, CARTA is a great solution. It is a little bit spendier. I don't have the price off the top of my head, but I could find that if anybody's interested. But it's essentially a cloud-based platform for managing your capitalization table. A lot of people maintain an Excel, probably longer than we should. Stock options and any type of equity-based compensation, I'd say, is a key trigger to getting something like CARTA. Convertible notes and classes of equity can be fairly easy to manage unless you have a ton of investors, but as soon as you get stock options, there's some accounting impacts there that if we have time, we'll talk about a little bit as well. It can get harder to keep track of everything, and they're your employees, and you want to make sure that you're on top of the compliance piece. So, yeah.
What about like cash flow and forecasting forward? I still do that on Excel. I don't know if QuickBooks, and I use QuickBooks. I don't know if it has a way to do it. I just haven't
It does
dived
not,
in.
no.
Okay.
There are, if you're using QuickBooks, I would recommend searching their marketplace for providers that do that specifically. There is one that we use, I didn't put it up right here, but I should have. It's called Cashflow Tool. It's just cashflowtool.com, I think. It'll sync to your QuickBooks, and it's great at doing the forecasting for you based on your historical data. What it's not going to do is analysis about, you know, what if we did this? What if we increased our price to this? What if we sold this many items, hired this many more people? There are solutions for that. I don't have them off the top of my head. I can follow up with you, but that's an area of technology and accounting that is constantly improving, and it's difficult because every company has different kind of what if analyses that they need to do, and inputs that sometimes are just easier to do on Excel. And Excel is really, it's a powerful tool, and one thing that's nice about it and not automating things sometimes is it does force you to get intimate with your numbers. And that, leads to more accuracy, unless you have formulators, but more confidence. So the rough part is once you got it set up, and then it's always a pain to keep updated
And
and
you've got
change.
that cash versus accrual basis.
Yeah.
to do.
Yeah, so it's not as simple as running a report from QuickBooks to figure it out.
Another question about CARTA.
Mhm.
So if there are different instruments on a cap table with different terms, can it calculate the position of any investor for those different terms?
I believe so. I might have to look at that, but I believe so.
Depending on your exercise variable in there.
Right. I'm wondering how many variables you can put in. We did it on Excel, and Excel turns out that you can solve recursive formulas. You say, I don't know what the answer should be, and you just tell it to figure it out, and then it does it iteratively. But we were still able to put in all the terms. I'm wondering if CARTA I'm hoping they have a smoother way and you can put in all these terms.
I don't know. I'll look into that. Any other questions before we move on from systems?
Okay, so we're gonna get into some meaty stuff here for a moment. We're gonna talk about monthly closes, the benefits of those. In our opinion, some of these tasks that we're gonna go over are very essential to monthly closes. The benefit of closing monthly, if you don't do it already, is that you're gonna maintain regular visibility into the accounting activity for your organization. And actually closing your software solution each month, meaning that nobody can make changes to periods that have been finalized and reviewed without a password usually. This prohibits any unintended or unseen changes happening in your historical data that you wouldn't be aware of. The first essential task is performing bank reconciliations, which is pretty basic, and we see most companies doing that from the start. Obviously, it's very important to do that. It's also important to reconcile your loan and credit card accounts, though, which we don't see companies doing always, and doing that on a monthly basis. Credit card reconciliations are often pretty overlooked, but it's important to have access to those statements and visibility into the activity and how it's changing each month. Most of these reconciliations, as you know, for bank reconciliations, I'm sure, but also credit card reconciliations can very easily be done through your accounting solution. You also want to reconcile your loans on a regular basis if you're not already doing that. And reconciling both of those things can help you capture your accrued interest or interest expense that sometimes companies might not recognize until the end of the year when they're filing their taxes. Let's go back here. Another overlooked but very essential in our opinion monthly close task is reconciling all of your other balance sheet accounts. So not just your bank accounts, but everything else. Because of the activity and these balances actually drive some of the activity in your profit and loss statement. So as with bank reconciliations, you want to start with your prior month reconciled ending balance and all of the inflows and outflows in that account, and then how we got to the ending balance at your current month end. When applicable, we also recommend reconciling to any third-party reports. So any systems that are integrated with your accounting solution will need to be reconciled to those third-party reports. For example, if you're using bill.com for your expenses and payables, that information is synced to QuickBooks, but sometimes sync errors do occur, and they often occur fairly frequently. So you'll just want to make sure at the end of every month that those balances for that period are tying out, just to make sure that you're not missing anything. Another example would be if you're using, go ahead.
So we're all small companies and we interact with small companies. So There are gonna be times where you're gonna be carrying AR for an extended period of time, and then that converts to bad debt. So how does that work into this?
Yeah, it should be a part of your, it's not up here, but accounts receivable reconciliation process. So one thing is running your AR aging, making sure that agrees to your balance sheet, which QuickBooks generally won't let that not happen, but it's still good practice.
But also if you're using a third-party provider to send out your invoices, I know like HubSpot is used a lot. There's multiple third-party providers, you want to reconcile with those too.
Yeah, but another piece of that should be reviewing your accounts receivable aging and determining accounts that need to be written off. If you're reporting on a GAAP basis, you should be estimating an amount of your accounts receivable that is going to be bad debt. That is very difficult to do as a smaller or newer business because you don't have the history. And it might be more realistic for you to do what we call a specific identification. But just making that a part of your monthly process, and then as soon as you are concerned about collectability, recognize a bad debt expense and write off the invoice. It'll hit your P&L, but once it's done, it's done. I will say on the tax side, the rules are a lot more strict on when you can write off bad debt. You basically have to have exhausted all methods of collection and documented that you've done that before you can take that expense and deduct it.
Or the other party folded.
For that. And you know, you can go backwards. It's great if you collect on bad debt. You just recognize the revenue again that you already put off.
No, I think this is an example where there are a lot of bookkeepers out there that are not as sophisticated as they need to be, and they don't know how to handle that stuff, so.
Yeah.
Yeah.
So that's one of the
It's-
lessons learned in this.
Yeah, it's really, I think the clients that we inherit that are coming from smaller operations, oftentimes their accounting is very separated from the day-to-day operations of the company. So, and it's not necessarily intentional. Like, I think a lot of those companies would interact more if you ask them to, but that's a main part of our practice is meeting monthly, if not weekly, if not bi-weekly sometimes, to make sure that we're on the same page about things. We know about difficult customers, we know what your plans are. Kind of thing.
Last piece, unless anybody else has any questions. Last piece about reconciliation, we often see, one of the areas that we see get messy pretty quickly are payroll costs, including employee benefits. So a lot of times they're integrated automatically in, say, Gusto or whatever your payroll processor is. Sometimes they're not integrated into your accounting system and you're making those entries yourself, or you're seeing the expense paid, but that expense isn't really all of your payroll costs. So just being careful with that, thinking through that process, and once you have that established, reconciling to your third-party payroll providers is really important on a monthly basis, as well as your like employee benefit statements. That's also very helpful if you're offering 401ks or health insurance.
That's a good reminder, though. We see so many companies not use the integration between their payroll provider and QuickBooks Online. Most of them have it, so look into it if you're not using it. And then you have QuickBooks Payroll, which of course automatically integrates, but still comes up with issues often. So the reconciliation process is important.
So the next part of a monthly close, after your reconciliations are done, you know that your books are clean and everything's reported the way that it should be. We want to look at analyses, different types of analysis. One of the first things that we recommend doing is just looking at a monthly fluctuation analysis on your P&L. Looking at this analysis helps further ensure the accuracy of it. It helps you identify expenses that may have been missed. It helps identify any significant transactions that the bookkeeper may have coded to marketing when it was actually a distribution. So it helps you catch those things early. It also helps you stay current on all of the other financial activity if you're looking at it regularly, so you can quickly and easily answer any questions from investors, for example. The next thing that we recommend is looking at a budget to actual analysis each month. Ideally, you would have a budget that corresponds to your chart of accounts. If so, we recommend analyzing that monthly. Again, so this is, so you can quickly identify areas that are not going according to plan and resolve those immediately instead of further on down the road.
And it's okay for your budget to change, like especially as a small, fast moving company. I think people get stuck on, this is the budget I set at the beginning of the year, and then all these things change and for certain parts of it become not applicable. Good to track against that original budget, but there's nothing wrong, especially when you're in that kind of nimble, cash is tight stage with changing your budget, and that gets a little bit into forecasting. Unfortunately, QuickBooks. I was about to say QuickBooks only lets you upload one budget, and I don't know if that's true. I will have to check on that, but if it does, then you only have one budget you can actually track against in your system, but you can change that and maintain, just export the historical reports.
Question.
Yeah.
Do any of your tools support like a waterfall analysis? So you start with a budget, you change it month by month, you may have 5 or 6 budgets, but you want to see how the changes are. Do they support that kind of waterfall, or do you recommend that for startups? I found it very useful.
Yeah, no,
when I was starting.
that's, yeah, kind of that iteration practice is helpful. QuickBooks itself doesn't do that. Cash flow tool doesn't do it either. I think there's another one called, I want to call it Fathom, but that sounds wrong. I will get your info and follow up with you on that.
Well, it's also a different story if you're on NIH grants or something.
Well, yeah.
Then you have to work with the PMS system.
Yeah, that just brings us, I think we're already getting into that, the cash flow analysis. A lot of times we see that being done manually because the reporting and our accounting systems don't necessarily support those. There are tools out there, but as Beth has said, they're improving every day because it's one of those analyses that's hard to get away from doing manually if you really want to have accurate analysis happening. But Sage Intact does have a financial planning and analysis tool. It's like an add-on that you can buy and it plugs directly into your solution. From everything that I know, most of the solutions are pretty robust and expensive, so it's hard to invest in them if you're earlier on. yeah. And budget to actual and cash flow forecasts are, as you probably know, pretty time consuming processes. So if you think about doing them monthly, sometimes that seems very burdensome. But that's just, if you're able to establish a really good process earlier on so that the reports that you have are accurate and you're not spending hours cleaning things up, it can just help make that entire process much more efficient.
So we have 8 minutes, right?
Yeah.
Are we done at 1?
Yeah, if you have some additional information to share, feel free, and folks can stay on Zoom or just hang out here, have some more food,
Okay.
whatever works.
We're just getting into cash to accrual, which probably will maybe take us up to right about 1 o'clock. And then as I suspected, we might not get into the complex accounting issues. We're happy to continue and go over those, or I think you all have this slide deck.
Mhm.
Yeah, access to that. And you have our contact information if you have any questions from that. I'm happy to follow up. We like the teaching part of what we do. So.
Sounds like some of you are pretty familiar with cash versus accrual method of accounting and how tedious it can be to distinguish the two. So we're going to get into the weeds just a little bit, and we're going to discuss at a high level the primary differences. So if you're unaware, cash method is just that. You're reporting expenses as you're expending your cash, and you're reporting income as you receive that cash. So while the cash method may give you a solid understanding of where your cash is at a certain point in time, it does not often provide any useful information when it comes to trend analysis, which is kind of a bedrock of your financial decision making. And it also doesn't help you understand your financial position regarding your upcoming liabilities, maybe your long-term liabilities or any receivables that you have coming to you. Are you gonna, okay. This is why many organizations prefer to operate under an accrual basis of accounting rather than cash, and just kind of look at those two things separately. So accrual method uses what we call the expense and revenue matching principle. So for example, you're only going to record as an expense services, purchases, or payroll expenses that relate to the period in question. All other bills or cash outflows that relate to future periods would be considered a prepaid, which is an asset on your balance sheet. For example, maybe you paid to attend a conference and the conference is in June, you paid for that conference in April. You wouldn't want to expense that until June. It would sit on your balance sheet as an asset until that time.
So in cash accounting, you would have accounted for that at the time it happened.
At the,
At the time you paid it.
Oh, I'm sorry, just hold on. But sometimes like a conference fee, you have to pay upfront, right?
Mhm.
So let's say you pay in April, but you attend in June. So how do you capture that expense in April or June?
So when you expense it and you see it come through your bank feed and you need to code it to a certain account, at that time, you're going to be coding it to prepaid expense. And ideally, you would be managing a prepaid expense schedule that would show everything that you put into that account. And you're going to be monitoring it every month during your monthly close process. And then when June happens, you've gone to that event, you would make a journal entry to take that out of prepaid expense, so reduce your asset, and then you would increase your expenses. So you would just move it from prepaid to expense. So that's just making sure that you're recognizing it in the proper period.
This is like when you get into, when you hear about playing games with your books, like you could do this all day and there's a right way to do it and a wrong way to do it. The right way is under that overarching theory of matching your revenue and expenses and recording expenses in the period that's incurred. Anything else would be fraud, so don't do it, but
The thing that always confuses me there is why is it called an asset? Because I mean, the money's already gone because I
Yeah.
already spent it. Why is it considered something that an asset always seems something that is something I have?
think of it almost like a piece of equipment that you might depreciate that, and you would definitely call that an asset, right? It's kind of the same thing. You paid for something that you haven't gotten the benefit for, so it's an asset to you until you use it up.
And I
Good
mean,
question, though.
sometimes I ask them to sort of keep both sets, so I have an actual tangible cash on hand. Because if it's an asset, it's still not cash on hand, and that's what you're trying to match, particularly if you're fully grant funded, then you actually need to know what's there, and there's no
Yeah.
adding to that, so.
And QuickBooks has a little toggle function to like report a cash basis or accrual basis. That works if you only have accounts payable and accounts receivable. If you have things like prepaid expenses, accruals, accrued payroll expenses,
Credit card liabilities, then it gets those.
it can sometimes get those wrong too. QuickBooks only knows the accounts that it is capable of reconciling itself, so if you are maintaining a true accrual basis and you have all the accruals and prepaids and there's all kinds of other accounts, you could switch back to that cash basis, but you'd still have to do some reconciling to add back the changes in those accounts.
Yeah, I know that's been the challenge is because you're usually doing accrual base even for your grants. But when you really want to know what's the cash on hand, you gotta go
Yeah.
back and do it the hard way.
And the same vein too as a prepaid expense, it's just the concept of a payable or an accrual. I think, at least we're very aware that sometimes attorney fees, they take a really long time to bill you for their services. So if you had a bunch of attorney fees that were you work with your attorneys in May, but they don't bill you for 2 or 3 months later, you'll want to go ahead and recognize that expense now, even if you haven't spent it yet.
Which can be hard, like, accruals are never gonna be perfect
Yeah.
because you can't know all the time, sometimes your lawyer might not even want to tell you how much they're gonna bill you, but, just that concept in general. Payroll is probably the easiest one to do. You've got a 15th through 30th pay period that you don't pay until the 2nd. You should recognize that essentially on the 30th instead of on the 2nd.
Really quick, I just wanted to show you kind of the impacts that this cash versus accrual, the 2 different methods can have on your financial statements. If we take a simple example like rent expense, say that your rent is $2,000 a month. If we're recognizing it under a cash basis, say in February, we paid our rent on February 1st and again on February 28th for the rent that's actually due for the March period. You'll see how it creates like this really lumpy and uneven financial statement. So it's really hard to identify trends unless you're really getting into the weeds and details if you report on the cash basis. Whereas if you do it on an accrual basis, you're making sure that those are being recognized in the months that they relate to. So you can see like, yes, we're not missing any rent expense. Our rent expense has an increase. We haven't accidentally paid for rent twice. And it just smooths it out so you can much easier identify anything that did go wrong during the year.
And it's funny because most people in their head, they budget this way. You think of your expenses as only hitting once a month, and then they'll like run their financials against their budget and wonder why it's off. And that more often, well, not more often, there's a lot of reasons your budget can be off, but that can play a piece in differences between budget and actual, and you end up wasting your time explaining something that really has no real impact on your business.
Right. So yeah, most businesses, if they're running under a cash basis, are doing some form of this in their heads. This is just the accrual method really gets that down and reflected in your financial statements so that it's not just knowledge that's in your head. You can provide it to somebody and it's useful for them to see too.
Question.
Yeah.
A lot of legal firms have sort of a startup package. Does Geffen Mesher offer something similar where you have a state your maybe templates for Excel and a checklist and things like that? Is there a, startup package that you can get people launched with?
Yeah. It's something I want to do and we don't have right now. Maybe this will kick us in the butt to be able to do that, but it's a little bit difficult to do that. Law firms have an easier time with that because an LLC is an LLC is an LLC. Accounting is different for every company, even 2 companies in the same industry can be very different. But I would like to, and if I do, I will share with this.
I think that certainly at least a checklist about the things to look at could be something, even though implementing the items on the checklist may look very different company to company.
For sure.
You can see on a cash, you're monitoring cash flow and your bank balances. You do have to have something on what's happening on the cash basis, because otherwise you're gonna end up with overdrafts on a couple of those months if you were doing it straight accrual.
Right, yeah, always important to keep tabs on your cash. Any other
Question slide? We're gonna get into some fun, complicated accounting stuff, but we saved you from that.
We might have to have a part 2.
Right. Like a discussion on QSB,
Yeah,
qualified small business
right.
stock is a different story altogether.
Yeah. Yeah, so, I know we had a lot of questions as things came up, but if anybody has anything else, we're happy to stick around for a bit.
You have different models of engaging with new clients.
Yes, so this was not intended to be a sales pitch about us, I promise, but we do. Generally, our minimum monthly fee is $2,000 a month, which I know is a lot for earlier stage companies. We do work with companies at a discounted rate if they need less services. We just kind of build in a plan of like, if there's a point at which you're not growing the way we both envisioned you growing, we might refer you to another provider. What makes us different is that we hire really really technically savvy accountants. Most of us are CPAs or
have passed their exams and
this one still needs to get her license, but we've done all the hard work. CPAs or aspiring CPAs, and that's not what every company needs to different stage in their business, but we do try to help our clients and grow with them. So happy to talk more.
All right.
Thank you.
Thank you so much, Beth and Veronica and Forward Slash for doing this for us today. This is a huge topic. Money is always a huge topic. And so we love to have money discussions periodically. So thank you all for coming. Thanks for joining us on Zoom. Thanks for coming in person. We just really appreciate you all being here and we go forth and have a great rest of your week.
Thank you.